Jom. Topic number 5, subtopic number 5 and 6. Kalau you nak share you punya slide untuk kawan-kawan you, boleh masuk dalam WhatsApp juga, you punya slide. So that kawan-kawan you boleh review slide you juga lah. Tengok. Okay, sambung. Cantik slide. Hana Najiha, Siti Shakira Zafira.
Okay, Assalamualaikum and a very good night to all of you. So, salam ala diucapkan. So, today, ini saya Siti Shakira Zafira, Betulapi dan my partner Hana Najiha binti Hamran akan membentangkan chapter 5 and 6, recognition and recognition and chapter 6, measurement. So, I pass the floor to the next presenter.
Saya bila nampak Siti Shakira Zafira ni, saya rasa macam dia macam Puteri Balkis pula dia berjalan. Puteri Balkis, ingat tak Puteri Balkis?
Kenal pelakon.
Muka dia macam Puteri Balkis tu.
Okay, Assalamualaikum. So my name is Hana Najiha binti Hamran. So today I would like to present topic 5 about recognition and de-recognition. Okay, so basically recognition is hello while de-recognition is goodbye. But of course the conceptual framework has its own way with words and is therefore define recognition as follows. So this is the definition of the recognition. Okay, so the recognition is process of capturing for inclusion in the statement of financial position or the statement of financial performance an item that meets the definition of one of those elements of financial statements, such as an asset, a liability, equity, income, or expenses. So recognition involves depicting the item in one of those statements, either alone or in aggregation with other items in words and by a monetary amount, and including that amount in one or more totals in the statements. So the amount at which an asset, a liability, or equity is recognized in the statement of financial position is referred to as its carrying amount. So it's a little bit long, so we're gonna make it short. Okay, next slide.
Hana, cuba you tengok slide pertama you. Record ke ni ke tak ni? Tak record kan?
Tak record lah, kena buat komputer.
Tak apa. Bukan. Saya ingatkan you record. Okay. Cuba you tengok dia punya, cuba you baca satu-satu dia punya contoh ya. Ini sebab kamus kan. Kalau you nak biasa recognition tu biasa punya. Cuba you baca contoh satu ni. Contoh ayat baca macam seorang lawyer. Ni baru you nampak. Bila baca kamus accounting ni dia akan cerita satu-satu apa maksud recognition tu. Cuba you baca slow-slow, saya nak tengok.
Okay. So the process of capturing for inclusion in the statement of financial position or the statement of financial performance an item that meets the definition of one of those elements of financial statements, such as an asset, a liability, equity, income, or expenses. So recognition involves depicting the item in one of those statements, either alone or in aggregation with other items, in words and by a monetary amount, and including the amount in one or more totals in that statement. So the amount at which an asset, a liability, or equity is recognized in the statements of financial position is referred to as the amount.
Okay. So you nampak dia punya kalau ayat kamus dia jadi recognition involve depicting the item in one of those statements either alone or in aggregation with other item in word or by monetary amount including amount. Dia jadi ayat macam tu. Ayat simple dia lah. Bila you nak recognize asset, you recognize asset tu. Macam mana you recognize kan ada tiga tu. Ada right, ada economic benefit, ada you punya control. Jadi bila ayat kamus tu dia jadi macam ni lah. You tak akan hafal punya ayat kamus ni. Dan setelah you understand buat 3 baris hingga 5 baris you punya based on you punya understanding pun dah settle. Tak perlu hafal. Yang penting fahamkan sahaja dia. Okay, sama.
Alright, next slide. So because it's too long, so we make it short. So recognition is including an element of the statement of financial position or statement of financial performance when it so qualifies. So next. So when does it qualify? So it qualifies when it meets the definition of the particular element, such as the definition of an asset, but it provides users with fundamentally useful information. So when you say the fundamentally is useful, so the answer you can refer to the chapter 3, that relevance and faithful representation. All right, next. Okay, so but what if it has met the definition of an element, but it doesn't necessarily provide relevant information? So, for example, it meets the definition of an asset, but it is uncertain the asset existent, where the probability of an economic influence that law, what will happen next? So, well, the asset will not be recognized in the face of the financial statements. Selalunya these unrecognized assets and liabilities akan ditempatkan in the notes of financial statements. But what will happen if the faithful representation is the one that affected? So, for example, an item meet the definition of an asset as it has is considered relevant. But bila kita ragu-ragu, the asset can be faithfully represented. So kita kena selalu ingat sebelum the item can be recognized, it has to be measured. So the item with very high measurement, uncertainty cannot be recognized. But it will be the case if it is close to impossible to come up with a reasonable estimate. Alright, so next. Okay, so anyway, a long time ago when accounting was fun and simple, they will know about the financial information interconnected. The financial statements are interconnected. The framework points out that the financial statements are linked because the recognition of one item requires the recognition of one or more other items. So it sounds complicated. So to state it this way, so I will list it over here, the cash flow statements, the statement of financial performance, statement of changes in equity, statement of financial position, and note to the financial statements. Okay, next. So if you think about the double entry system, you will think about the debit and credit. The interconnectedness among the financial statements can be demonstrated by looking at the movement in the net assets or equity for a period. So for the first one is the net asset beginning. So equity at the beginning of the period, and the fourth one is net asset ending. So have your equity of the end of the period. So a lot of things can happen during this period, such as number 2, profit or loss. So for example, for the entity could have enjoyed the profit and also can suffer for the loss. So for number 3 is contribution and distribution. So they also have been contribution made by and also then distribution made to equity holders. So equity is reflected in the statement financial position. Alright, next. Okay, so why recognition is important? It is important because to recognizing assets, liabilities, equity, income and expenses depicts an entity's financial position and financial performance in structure summaries. Okay, so pentinglah untuk kita mengenal pasti aset, liability, equity, pendapatan dan perbelanjaan untuk kita tahu kedudukan kewangan entiti and prestasi kewangan dalam structure summaries. Okay, next. So, we all done about the hello part. So we're gonna begin about the goodbye parts. So de-recognition is the goodbye. So I will define the de-recognition. It is the removal of all or part of a recognized asset or liability from entity statement of financial position. Okay, next. Okay, so accounting normally, okay, so when do we de-recognize? So when it no longer meet the definition of the specific element. So accounting normally says goodbye to an element of the financial statements when the element of the financial statement if no longer meets the definition of the element. For example, you have lost control your asset because you have sold it. So you already paid your liability plus you no longer have a present obligation. So then you have to do recognize. However, at times we do recognize only a portion of the element. Okay, such as we have only paid a portion of our long-term debt. So the portion that we have to recognize is called the transferring component. So while the portion that is left in the financial statement is called the retained component. Okay, so I think that is the end of the hellos, and goodbye for topic 5. Thank you. So I will move to Siti Shakira.
Okay, so here comes my part. My part is a chapter 6 measurement. So first of all, what is measurement? Measurement is the process of quantifying in monetary terms information about an entity's asset, liabilities, equity, and income and expenses. So it can be categorized into two, where it contains historical cost and current value. So what is historical cost? Historical cost have two. It is non-financial and financial, where it provides monetary information about assets, liabilities, and related income and expenses based at least in part on the price of the transaction or the event that resulted in them. So here is a table where the non-financial assets is where the cost incurred, including transaction cost, consumption, impairment, does not reflect changes caused by other factors. Then we have a non-financial liabilities, the consideration received, net of the transaction cost, the interest, fulfillment, onerous. Onerous is a time-consuming. Then it also does not reflect changes caused by the other factors. Then we have the financial assets, where the consideration given, including transaction costs, interest, changes in estimates of cash flows, including impairment, receipts, and it also does not reflect changes in prices caused by others. So there we go, financial liabilities. Also the same with the non-financial liabilities, where the consideration received, net of the cost, net of the transaction cost, interest, and it's different as they have changes in estimates of cash flows, including impairment, payments, and it also does not reflect the changes in price by others. So here we go to the current value. So what is current value? Current value is current value. This is the information provided for the current value, as provide monetary information about assets, liabilities, and related income and expenses, using information updated to reflect conditions at the measurement date, where the measurement based on market participants assumption, that is fair value. Also the entity specific assumption is value in use, or we can call fulfillment value or and fulfillment value, because fulfillment value is using for liabilities. So we also have a current cost. Okay. So as the information provided for the historical cost, it can be obtained from the price of the transaction or other, as the asset and liabilities at the historical cost, where a balance is needed between giving entities the flexibility to provide relevant information that fully represent the entity's asset, liabilities, equity, and expenses. So the historical cost, this accounting treatment is remain unchanged, but there we have a fair value that we use the entity assumption, where the asset and liabilities at fair value may have predictive value or confirmatory value. So there are also value in use and fulfillment value, where the present value of the estimated cash flows from the use of an asset and its ultimate disposal. We also can ask for the fulfillment value we can get from the present value of the estimated cash flows needed. So as for the current cost, the information provided, we need to take the asset and liabilities measured at the current cost, as the cost at which an equivalent asset could be acquired, because some of them will be created at the measurement date, or some of them will be created at the consideration that would be received for incurring or taking on equivalent liability. So there are also factors to consider selecting the measurement base, where it is necessary to consider the nature of the information that the measurement basis will produce in both the statement of financial position and statements of financial performance. It has about 5, but I give to you 3. The main is the relevance of information, the factual representation that have been presented by the group Kak Mar and also Kak Dini, and also the understandability and cost constraint, also the same with the previous group. So what if we have more than one relevant measurement basis? So we need to obtain the information provided using single measurement basis, where we will disclose other measurement basis in the notes of financial statements. It also, if we have we have more than one relevant measurement basis, we could also use the current value measurement and different measurement basis, where it's include the measurement of equity, where the measurement equity is the measurement of the total carrying amount in the equity and the cash flow based measurement techniques. So that's all from me. So next we will be presenting about the past year paper, chapter 5 and 6. The chapter 5, recognition and derecognition, from the paper April 2000 UITM, and also chapter 6, measurement, June and December 2019 UITM. So I will pass the floor to the next presenter.
Okay, so for the question 5. Okay, so the question is, a chemical manufacturer acquired plant enhancement for safety and environmental reasons. The acquisition of such asset does not directly increase the future economic benefit of the existing plants. Hence, it's not qualified for recognition as asset under IAS 16 that has been revised. So discuss how the cost of such an asset could be accounted. Okay, so the answer is the initial cost of an asset takes into account all of the costs associated with its purchase and use. The purchase price, as well as commission, transportation, appraisals, warranties, and installation and testing are all included in these expenditures. So in the company's chart of account and general ledger, the assets accounts are normally listed first. Asset accounts in the general ledger usually contain the debit balances. When the balance sheet is generated, the balances in certain of the asset account will be aggregated and presented as a single figure. Okay, so I will pass to the next question, Shakira.
Okay. So the next question is question 5B in June 2019. It's the same question with the previous group, but I will answer differently. So, 2 major qualitative characteristics of financial information in the International Standard Board framework are reliability and relevance. With the reliability, the main component is factual representation. Discuss the meaning of relevance and factual representation. So, this is based on my answer and a bit from the revised conceptual framework 2018. The meaning of relevant based on the conceptual framework that relevant financial information is capable of making a difference in the decisions made by the users. So as the financial information is capable of making a difference in decision, it will have a predictive value or confirmatory value or both. Then we have a factual representation. From IASB, factual representation means representation of the substance of an economic phenomenon instead of representation of its legal form only. So it also has been applied to seek the underlying characteristic of completeness, neutrality, and freedom from error. So this is a question about question 2A, December 2019 from UITM paper. This is a question about the current cost. Statement may be presented as an alternative to the main financial statement. complete replacing the historical cost report. However, the current cost accounting measurement system has still not been widely adopted in many countries that have attempted to implement it. Discuss to the merits of current cost accounting. So the firstly is accounting cost. It takes time to accumulate current value information, which increases the cost and time associated with the production of financial statement. Secondly, the accuracy of information, as some current value information may be based less on facts and more on guesses or poorly founded estimates, which impacts the reliability of the financial statements in which this information is included. So that's all from us. Thank you.
Okay, thank you Hannah dan juga Putri Balkis. English pun macam Putri Balkis dan lebih kurang. Okay.